All right. What's up, guys? Welcome back. This is We Talk Money, episode 41. How's it going?
Hello, good.
All right. Hopefully, this will be the last time we're doing a Zoom show. I know I've been saying this for a couple weeks, but our producer is finally coming back in a few days. So we will be back in the studio soon.
Oh, please make it happen.
What's going on? So today, I think we're going to title this, this is Ethereum's time to shine. It's been lagging Bitcoin for quite a while now, and we'll look at that charts. Just as of a few hours ago, hit a new all-time high. So congratulations, Ethereum. I know you've been heavy long for the past few months, so that's paid off big. Stocks, what's going on in stocks, guys?
Oh, people are hunting down the shorts, short squeezing.
Yeah, lots of short squeezes.
Awesome.
Yep. GameStop, obviously the poster child, but pretty much all the stocks on the high short interest lists are at least being attempted at short squeezes. So, Stitch Fix, Macerich, AMC,
Bed Bath & Beyond.
Yeah.
From what I understand, guys, and correct me if I'm wrong, but I believe that stonks only go up, right?
So, yes. Apparently, that is what happens now. No more corrections.
According to these professional TikTok investors.
Which, by the way, talking about professional TikTok investors, we got to give Nikki a plug. She just posted this video, Financial Planner Reacts to TikTok Investors. Absolutely brilliant. I know I want to see more of this.
Yeah, I'm definitely going to be doing more videos like this. So far, the response has been pretty good. It's funny because there's good and bad advice all over the internet everywhere you look, but TikTok specifically, has a lot of younger investors, Gen Z investors, and people in finance, and some of the stuff that comes out of their mouths is absolutely hilarious. And I felt like it was my duty as a financial planner to respond to some of these videos and actually try to make it funny and educate as well, drop some knowledge.
Yeah.
So, hopefully it's something people can have a laugh and then actually learn something from.
So tell me what you guys think of this. I think I have like the whole TikTok investor and like TikTok entrepreneurs. I think I understand what's happening there. To me, it seems like, people are basically going from knowing nothing to basically positioning themselves or putting themselves out there as experts basically overnight. So it's kind of like as they're learning, it's kind of like day one, they think about the stock market. Day two, they read a couple articles or watch some videos about the stock market. This is also happening in crypto. And then day three, they're producing content, basically repeating what they've heard or kind of like coming up with their own spin. But instead of saying like, hey guys, I'm new and I'm being humble and here's my opinion. They're basically preaching to people and saying like, hey, this is how the world is. I'm an expert. You should follow me. Get this advice. I don't know. What do you guys think of that?
I mean, obviously 2020 set the stage for a pretty easy market environment. I mean, for newbies. And if people were coming into this and they were taking trades and, all the Robin Hooders, things were working. And yeah, it strokes your ego a little bit if that's what you're doing coming out of the gate, triple digit gains or whatever. It's easy to kind of feel really empowered, like you know exactly what you're doing. But I get why we're here. I understand why we're here, but it's just funny because as seasoned investors, as we are, we know that this shit doesn't last forever and market environments change all the time. And
I don't know, Trav, is that true?
But yeah, I don't know. Who knows? Money printer go burr. I don't know.
I mean, we laugh because some of the stuff that we see on TikTok is just so absurd and wrong. But there is a serious side to this. It's pretty dangerous in some cases. There's a lot of people that are being sucked in that are going to lose their life savings or worse.
Yeah.
And that is just a classic market cycle, right? And you've seen it in crypto. You saw it in 2018 in crypto. You're seeing it now. Yeah. And now in stocks and crypto, we're seeing it in 2020, 2021. We don't know when this particular cycle will end. I know some people are saying, oh, well, this cycle's different because the Fed, and this cycle's different because, these companies are better than they were back in the dot-com bust or whatever. But the truth of the matter is it's the same. like we're gonna see a lot of people get blown out. We're gonna see some of these assets down 80 to 100%. And people are on leverage, people using options are going to get crushed. And especially the ones that are doing really, really aggressive strategies and really stupid things. So, you know, as much as I want to take advantage of the current market conditions, and I will, I've also, you know, tried to reach out to a lot of our community members and my friends and family just to kind of let them understand, like, this is a really unusual and dangerous time.
Yeah. And a lot of people that are doing this on TikTok, they have zero risk management skills. I mean, a lot of them have zero risk management skills. And that's where they're really going to become humbled, when they're in a trade that's oversized, or, you know, something happens and they're like, oh shit, this isn't as easy as I thought it was. So I hate seeing people have to learn the hard way, you know, and that's why we do what we do.
Yeah. Chris, what are you seeing on the crypto side? How are you feeling about the state of it now? Because I know you're still bullish on some of the crypto assets, like we just mentioned ETH at the beginning, but
yeah, you know, before we dive into the charts, I'll just kind of, I guess, mention my opinion about market sentiment. And I think we might have mentioned this last week, but things feel very over exuberant and the market sentiment is just one-sided. You know, everybody's bullish. It almost feels even more extreme in some ways than 2017. Now, again, I'm not calling for a market top, but whenever I see the market sentiment shift to the greed side so extreme, I start to get freaked out too. And, you know, I just see all these new like crypto YouTubers, you know, I'm going to call them moon boys, because that's really all they are, is like, oh, this coin to the moon, this to the moon. And all they're doing is kind of like the TikTok investors, is encouraging reckless behavior, which is going to cause a lot of people to lose a lot of money. And so, you know, even on a day like today where Ethereum's about to break the all-time high or is flirting with it, you know, I'm excited. And just like you guys, when there's opportunity, we can take it, and we know how to manage risk and we know how to get in and out, but a lot of people don't. And so, yeah, I'm starting to get a little fearful as well. Now, again, where is the top going to be? Who knows? Am I bullish on crypto? Absolutely. But just like I said in 2013, when Bitcoin went from 100 to 1,000, when things get unsustainable, people get hurt and markets pull back deeper than you think they can. And people that don't think about that are the ones that lose the most amount of money. That's why, you know, like you guys talk about in our community, we first and foremost talk about risk management. That is the most important thing. First, you have to learn how to survive in a sea of sharks, and then you can become the predator, right? So I don't know. Yeah, I mean, I guess my opinion is very similar to what you guys are seeing in stonks.
I mean, that's exactly why I love corrections so much. It's because it's healthy, you know? These moon boys that just want stuff to just keep going up. Like it's just like you said, it's not sustainable.
Yeah. I love the term moon boys.
I know. Did we just coin that, or was that a thing?
I've seen it floating around. And it's not true. I mean, I don't know. I don't want to shit on anybody else for doing content. I think it's great. I think we need to get the message out there. But these people that just, they don't understand the skill set and the skill stack that you need to have to be an investor or trader, those people that are out there doing a lot of content, getting people really excited, they seem smart in a bull market, but they disappear in bear markets. And so just got to be careful of that. Now that we've officially like depressed everybody, let's
sorry guys.
So yeah, let's take a look. If we zoom out, you know, taking a look at what's happened in Ethereum. So basically, for anybody that doesn't know, in 2017 we had a massive move in Ethereum where, you know, it went from $10 or $20 to $1,400. That was completely driven by the ICO bubble. And then you can see it topped out and was down 95% from the highs, right? This is why we talk so much about risk management, is because this can happen, right? So imagine if you had $1 million worth of Ethereum at the high and you're down 95%, right? So you've lost over $900,000 in your account, right? Think about how, if you've never experienced a drawdown like that before, think about what you would do and how you would feel if you went through something like that. And then make sure that no matter what asset, you know, Bitcoin, Ethereum, altcoins, stocks, whatever, any volatile asset that you buy, make sure that you have a position size that if it did go down that much, you wouldn't jump out a window, right? And so looking at where we are today, testing this, what I like to do is run a measured move of the prior range. This is how we came up with our $37,000 first target on Bitcoin and Link and a lot of other things. If all you do is measure the prior range and then stack it above, that can give you kind of a healthy one-to-one measured move. Again, sometimes you don't make it that far. Sometimes it far exceeds that. But if we do this in Ethereum, the next major area is going to be around 2,750 or 2,800. So this is the reason why I'm actually still bullish on Ethereum is a couple of things. So from the technical standpoint, there's a few things. One, Ethereum is modeling the earlier days of Bitcoin. And also, as we know, like typically after Bitcoin makes a really big move, so we recently went from the 10K zone to 20K, and then things got accelerated from 20 to 40 and has been over under our first profit target, which was that first measured move of 37,000. And so you can see if Ethereum follows that trend, that's where I would expect it to go to initially. And then we'll see from there. We'll reevaluate at that point. What could get in the way of that is if Bitcoin has a deeper pullback, because typically whenever there's a panic in Bitcoin, most altcoins follow initially during the panic phase, and then they'll start to get disjointed. What you can also look at is the BTC or the ETH BTC chart. So if we look at here, you can see the value of Ethereum compared to Bitcoin has been in this range really since early 2019 and is starting to challenge the 0.04 zone. If we get a breakout there, we could start to see Ethereum really accelerate compared to Bitcoin, if that makes sense.
Mm-hmm.
So yeah, that's really the kind of the bigger picture there. And obviously I've got, about a half dozen other trades open on the table, and we can talk about some of those. But why don't we also just take a look at what's happening in stocks? Because I think that's a pretty big mover right now as well. What are you guys seeing over there?
Trav, go ahead.
We mentioned it briefly earlier, but there's a real hunt for short squeezes over the last week or two. So GME, GameStop, which, I know we've already patted our backs. We've already patted ourselves on the back for that when we were calling for a potential short squeeze when the stock was at $4 in August. It's been almost a 10 bagger since then. I know Nikki still has some of her swing trade in GME on. But GME, it's just a great example of, basically what's happening in the current market. And so Wall Street Bets, it's one of their favorite stocks. A couple of, Wall Street bettors made a big call on it a year ago. It's worked out tremendously well. Now I think a lot of the Wall Street bettors are actually coming in late and still hoping that it's going to squeeze to say $50 or $100 a share. I'm not sure. I know we saw one of the board members there at GameStop sell like half their stock last week. So I don't think the reward to risk is very good up here. But it's also leading to people looking for sympathy plays. So they're like, some people are already moving on and trying to figure out, well, what is the next GameStop? And so they're looking at all the stocks that are highly shorted, like we mentioned earlier, whether it's Bed Bath Beyond, Stitch Fix, AMC. AMC is an interesting one.
By the way, Stitch Fix, man, you've nailed this. And are you still holding most of the position or all of the position?
Yeah. Still holding most of it. Still holding all of it actually. So I'm trying to get to my long-term capital gains holding period, but it's been a multi-bagger.
Where's the clap?
You got in March, right?
Yeah, I got in at March around $13 a share. So unfortunately, a relatively small position when I entered, just because I didn't have a ton of excess capital. There was obviously a big sell-off going on at that time, so I was shifting a lot of the portfolio to a bunch of new positions and selling out of stuff during March of 2020. So, but this was one that I took a position on after hours when it sold off on earnings that I thought looked really good, and had a really interesting long-term opportunity. And it's playing out. I don't actually think the business results have justified the share price increase in the past year, but I think they still do have a pretty interesting long-term opportunity. And obviously they're benefiting in the short run from a short squeeze. So it's not one I would be buying incremental more shares up here right now.
Yeah. As far as the technicals go, I mean, we saw this pattern play out over the past year or two so many times, accumulation range breakout. And once it breaks, the momentum players step in and drive it higher. So to be able to get in on something like this at the low of an accumulation range is really nice.
Yeah. But yeah, I mean, shorts are starting to give up. You know, I was reading actually last night a letter from Bronte Capital, which is one of my favorite short focused hedge funds. And John Himpton, the guy who runs it, is a really colorful character out of Australia. He's identified a lot of frauds over the years. He's a very, very smart and good investor. And I like his approach to the way that he short stocks, because he keeps all his short position size very, very small. So he has about 200 short positions in his short portfolio, typically at any given time.
Oh my God.
Most of them under, 1% or even under 0.5% size. But he's really good at finding frauds, and he's really good at identifying. I mean, Wirecard is a recent example of one that he had identified years ago as a fraud and shorted successfully. So, but his letter was all about basically how his portfolio has just been, a nightmare for him for the last 6 months, because they've been forced to cover some of these positions that he knows are eventually going to go to zero that are frauds, but he's had to actually buy them back at higher prices. And he says, we've seen this movie before. We know how it ends. We just don't know when it ends. And so, even great short sellers like him are having to kind of throw in the towel, or at least reduce exposure in the near term. So yeah, I mean, he makes the point though that a lot of these will eventually be down 80 to 100%, and there'll be an opportunity to really capitalize again. But right now, it's tough out there.
Yeah.
And then you've also got, of course, all of the SPAC and IPO craziness. So last week we had Poshmark and Affirm go public and immediately doubled. So immediately we're up 100% or more on the first day of trading. You've got still, many, many SPACs that are issuing new capital and going public. And then you've got a bunch of SPAC deal rumors floating around. Yeah, that graph there is a great graph showing all of the new SPACs that are pre-deal that haven't announced a deal yet. It used to be that most of those SPACs that were pre-deal would trade pretty close to liquidation value. And now they're all trading up well ahead of any deal announcements. So now the average premium on a lot of these SPACs, or the average premium across all SPACs that haven't announced a deal, is over 20%. So that's an interesting.
So people are, just to clarify, for anybody that doesn't know, like the typical SPAC structure, this means people are buying basically a fund and driving the price of the fund up before there's even any deal announced, right? Like,
yeah, before the fund has made any investment. Yeah, it's just a pool of cash that they're bidding up in value. So
I wonder if people actually know what they're doing, or if they're just like, oh, okay, SPAC is hot, I'm going to buy this stock, and they don't even know that it's not even a real company yet.
Yeah. I mean, okay, there is a legit reason for this in some sense, because a SPAC, when it trades at liquidation value, is a really asymmetric reward to risk opportunity, because you can essentially buy the SPAC if you buy it at liquidation value. And worst case scenario, if they try to do a bad deal or they do no deal, then you get your money back, or maybe even your money back plus a little bit of interest. And then of course, if they do a deal that's really interesting and good, then you can see a pretty nice return. And so a lot of people view a SPAC at liquidation value as a really good risk reward situation. And that's generally true. But as they've started to figure this out, they're bidding up these SPACs. And so that asymmetric reward to risk opportunity is kind of going away. But we have seen in this hot SPAC market environment, a lot of SPACs will trade up on deal announcements quite a bit. Like, obviously we saw with like famous ones like Nikola and DraftKings and Virgin Galactic and SPE, which we owned early on. Those have worked out really well. And so people are trying to predict what the next one's going to be. Last week, it was CCIV, Churchill Capital. That's a SPAC Churchill Capital is another SPAC, but they're reportedly in talks to do a deal with Lucid Motors, the EV SPAC.
Oh, that's right. Yeah, we talked about that one.
People are like literally tracking private jet flights between the two headquarters to see if this deal is going to be announced.
I kind of love that. I think that's hilarious and awesome.
Yeah. Hedge funds have done that for a long time, actually. Hedge funds with pretty significant resources will track corporate jet charters in some cases to try to see where executives are going. Yeah, it's interesting.
Speaking of hedge funds, I tweeted this morning, and Trav, Nick and Trav, I wanted to get y'all's opinion on this. So Renaissance, they are the best hedge fund in the history of hedge funds, right?
Their Renaissance Medallion fund is thought to have the best performance over a 20, 30-year period of any hedge fund ever in history.
Yeah. So what I think is really screwed up is they have their Medallion fund, which is closed, right? And didn't they kick out a lot of investors, and it's basically only like insiders and employees at this point?
Yeah, that's right.
So last year, the Medallion fund made 75%, but their public funds, where actual investors can invest, actually lost like 20 to 30%, right? Like,
Yeah.
what the hell is that about?
Yeah. Yeah. You know, it's interesting. So they wrote that biography on James Simons, the founder, one of the heads of Renaissance last year, or a year before it came out.
Mm-hmm.
What was that called? It was called The Man Who Solved Markets, or something like that.
Yeah, The Man Who Solved the Market.
Yeah. And in that book, they actually talk about this issue because there have been various times where this has happened. So the Reef fund, RIEF, is a fund that manages, I think, like 100 billion or more of capital. And that is open, or has been open, to outside investors. But for like many periods, it's underperformed the flagship Medallion fund. And the question is like, why? They use a different strategy, but it's so interesting that they have such a incredible fund, and then a fund that like really doesn't seem to be all that great, or at least in some years is like
Wall Street thing ever, right?
Is there maybe a more of a human element to the better performing fund? Because aren't they?
I think it's completely.
Or are they both?
Right?
Sorry, say that again.
I don't know.
Yeah, and the 2020 results are, I think, the worst ever. That delta between the Medallion performance and the Reef fund, I think, is the worst ever.
Yeah.
It's like 100% delta, which is even extreme for Renaissance. So yeah, it's a weird situation, but it kind of shows, I think, that the whatever strategy they're using in Medallion is capacity constrained. Mm-hmm. They can't do the same thing that they're doing with Medallion on a scale of like, $100+ billion, right. Which is true of a lot of strategies, frankly. Like most hedge funds, as they get larger in size, their performance gets worse. We've seen that also with Warren Buffett's Berkshire Hathaway. There's just fewer places you can invest capital at high returns as you get very, very large.
Yep. Cool. Okay. So, let's talk about, I guess, just macro stuff. I know we've got some earnings coming up. We've got the inauguration tomorrow. We've got vaccines being handed out all over the world now. Why don't we dive into that? So taking a look at the U.S., we peaked at about 300,000 cases a day, over 4,000 deaths a day. Hopefully, fingers crossed, that's the top, and we're going to start coming down from here. What do you guys see, I guess, as far as like macro risk or influences in the short term that could affect markets overall?
I think right now the markets are going to have their eyes on this proposed stimulus package that Biden is going to try to get through. It's 1.9 trillion of stimulus. Again, more direct payments to Americans, beefed up unemployment benefits, not as much as before in March or April, but more than what we have now. So what I think could happen is if something like that ends up getting passed, obviously the market is going to like that. And a lot of that money, going to these consumers eventually could flow through to these corporations' earnings, especially if we really do have a nice recovery. So I do think the market would be paying a lot of attention to that. And I also think this is kind of in the future a bit, but I think the market will also be paying attention to tax rates going forward. What is Congress going to do with that? So.
Yeah, I mean, with the coming stimulus and the Fed, just the printer going burr. I mean, this is a pretty wild time, right? Like, Nikki, I think you sent these in. We've got a few images here for you guys watching the video.
Yeah.
What did you want to take a look at on these?
I mean, essentially, I think the point that was being made here is, as long as interest rates stay low, obviously we are anticipating to take on more debt. But if you think about the interest rate as a share of GDP and the interest rate trend, I think people are saying that if that stays under control and if the Fed stays accommodative, then maybe we can get through this. But there are all these debates about the debt. There are all these debates about how much more debt can we handle? If we are going to continue to see deficits increase, what is the government going to do about it? I feel like we're kind of in this uncharted territory with this type of stimulus and this type of fiscal spending that we're seeing. And I was going to note that it's funny because we don't hear about the Fed anymore. The Fed truthers are kind of quiet right now. And we're not hearing so much about that as we are about the fiscal side. And that's the way people should be thinking, because what the government is doing, what money the government is spending is really what's going to matter when it comes to, inflation expectations. So.
Yeah, I think that's one of the big risks. As you were asking the question, Chris, that was one that popped in my mind, is that investors are going to be increasingly focused on inflation risk, kind of probably more towards the middle to back half of the year. So I do think the how they approach the stimulus package will be interesting, because if they try to finance it or fund it with large tax increases, that's just going to offset what they're trying to do.
Exactly.
So if they're trying to push corporate tax rates up, tax rates on the wealthy up, that's just going to basically be a headwind and offset a lot of the things that they're actually trying to do with fiscal stimulus. Mm-hmm. But on the flip side, if they let the deficit run wide still, and the Fed actually lets the economy continue to run hot and markets continue to push momentum stocks and SPACs and all the other things that are happening, then I think in addition to all that, we're also still dealing with supply chains that are not streamlined right now because of COVID. Everyone pulled back on supply while demand went up. And so a lot of supply chains are still kind of wrecked. Imagine, just think about trying to get like gym equipment right now still, or think about, various things that have been on back order forever, things in the gaming industry, stuff like that, right? They're still.
I heard even Ford and GM had to pull back on some production because they couldn't get chips or something.
Yep. There's a lack of semiconductors that go into the automotive sector right now. There's a lack of GPUs available on the market. There's a lack of supply when it comes to certain parts of the memory market now. So there's all these like shortages. You've seen commodities
on exchanges.
Yep. You started to see some issues and some price increases in some of the ag commodities as well, like wheat and corn and soybeans. And so as demand comes back and supply is slow to catch up, you're still seeing problems in the supply chain. So all of these things that I was just talking about have a kind of upward pressure on rates and inflation. And so I think at some point, all of that starts to concern investors later, maybe towards the back half of the year, when investors start to say, I don't know, the Fed's been talking about letting the economy run hot to get back to low unemployment levels. But at some point, they're going to have to deal with rising inflation problems, and they're going to have to raise rates. And I think that will eventually be something that could put some pressure again on the market, when the market's like, now we got to price in higher rates potentially going forward. So yeah, I don't know if that's 6 months out or 18 months out, but I think that is going to be something that investors will be increasingly focused on as we move through the year, is like, what do we do about the inflation risk, and what investments will we position ourselves in to benefit if inflation continues to move a lot higher?
Awesome. You guys want to jump into some Q&A?
Yeah.
All right. First question is from Steph. Says, hey guys, I've been buying cryptos since 2014. We have a goal of waiting until we can pay off the house before cashing out, which would mean possibly mortgage free for the foreseeable future. So congrats on that. Does that sound like a good plan, or should we hodl even longer? I have a good education and a good job. Man, that is the literally like the $100 trillion question, right? Is when Bitcoin prices go up, do you cash out into fiat to pay off debt or to buy other assets, or do you hodl for more? I think we should all answer this. And first and foremost, we can't give personalized financial advice. So we're just going to answer this in general, because I think this is a question that a lot of people are facing right now. When you have prices that have gone up incredibly high and the prospect of them continuing to go up, right? It's impossible to pick market tops all the time. So what do you do? For me, the way that I start by thinking about this in general is, if you've made a life-changing amount of money where in fiat terms today, that would drastically change your quality of life, meaning you can pay off a mortgage, you can retire and go live on a beach, or whatever it is. If it can have a material impact on your life, you might want to consider taking some profit, because we never know what the short to medium term looks like in markets, right? With Bitcoin, are we bullish long term? Yes. Does the Fed does the macro picture look bullish for, hard assets and a verifiably scarce asset like Bitcoin? Absolutely. In the short term, can you stomach 80% or more drawdowns, and would you have regret if prices fell and you didn't take profit, right? So for me, it all comes down to how do you manage that in a way that you'll be okay no matter what happens. And again, if you have a life-changing amount of money on the table and you have a quantifiable personal finance goal that you can achieve today that you wouldn't regret selling, even if prices went higher later, then why not do that, right? Or the case is, if you're like, I accept the downside risk and I'm okay going through a big drawdown or never even getting back to this level ever, you also have to think through that. So what do you guys think?
I think that it's actually the way she's thinking about it, about how they're not going to cash out until they can pay off the house. I think that could be maybe a dangerous way to think about it. Instead, I think those need to be separated, if anything, reversed. You need to think about this not so much as, you don't want to give yourself the pressure of, oh, I'm not going to sell my position until I can pay off my house. You have to really separate those things completely, and you have to think about your position as a trade, and you have to manage it as such, with the idea of, as you mentioned, Chris, the possibility of it going down and reversing, and trading that position with no regrets. And, I think that it can be detrimental to managing that trade when you're putting pressure on yourself to have some other objective or goal that's attached to it. So I don't know. Does that make sense?
Yeah, because the market doesn't give a damn about your personal finance.
Right, exactly.
So if you find yourself in any trade or investment and you're thinking about the money and you're trying to tie that trade's performance to
your mortgage,
not
a good idea, in my personal opinion. Just consider all the possibilities, what could happen, what you can take profit along the way. You can, we call that scaling out, to make sure that if it does end up selling off a little bit, you wouldn't feel stressed or have regrets about it. But yeah, I would say try to think of them as separately and manage the trade based on your risk tolerance.
Given the small amount of details we got in that question, it did sound like, this person, Steph, has a good income, stable job. And so the mortgage doesn't seem to be too much of a financial burden. Obviously, I don't know what their level of the mortgage is or the mortgage interest rate, which may factor in. But, the idea that you're going to, have the ability to pay that mortgage regardless of what happens in your other investments, I think is helpful. And when it comes to thinking about whether or not you should pay down on a mortgage on a home like that, it really, I think a lot of it just comes down to personal risk tolerance. And, do you want to maintain a, mortgage, even, low rate mortgages don't actually cost that much per month unless you are like really dealing with a very high level of mortgage debt. But, it's something that I think, like, what am I trying to say here? I guess what I'm trying to say is that, paying down a mortgage is great if you feel like you want to have the flexibility to quit your job, or, you want to just feel really, really safe and your risk tolerance is relatively low. Otherwise, if you have a stable job and a stable income, then again, I don't think it's like an urgency. I don't think it's something that has to be done. Especially considering, like I said, how low rates are right now, and it doesn't actually create that much of a burden to maintain a mortgage, especially if property prices are going up because of inflation and things like that. You actually benefit from keeping that mortgage and having the property be leveraged and having an upside to property prices. So there's a lot there, a lot of factors there. But, I think a big part of this is your risk tolerance, and then obviously what your 10, 20, 30-year goals are.
Yeah. And to your point, like, the opportunity cost, like say the mortgage is $500,000, think about like an average return in the stock market, or, some sort of longer term return in Bitcoin, and think about what that is compared to a 2 or a 3% mortgage.
Yeah.
It actually makes sense in this environment with low rates to have debt, right? If it's debt that's serving you, as opposed to eating up a lot of cash in something and missing out on potential gains in the stock market. Again, nothing's guaranteed and it can go up and down over years, but if you're not in a position where you have to pay it off, maybe it's better to hold assets instead.
Yeah, and she's 38. She's young. She still has time.
Yeah.
Yeah. But, if you wanted the flexibility of, say, being able to not have a mortgage payment and travel, or you wanted to do something different with your lifestyle in 5 years, obviously that would be a whole different discussion.
Yeah.
But there's also some ratios you can look at, like what is the percentage of your monthly income that, the mortgage and house payments represent? That's a big factor. If it's, under 20% or, 25% even, then it's a pretty safe level, assuming you have a pretty stable job, right? So the need to pay it down isn't as necessary. Now, if you're pushing 50% of your monthly income, then yeah, maybe it makes sense to actually pay down some principal, and you don't have to do all of it at once. In most mortgages, at least here in the US, you have the option of paying down principal in part. So you don't have to do it like all or nothing either. So
yeah,
a lot to consider there.
100%. All right. Lynn was asking, I oversave. I feel guilty for spending sometimes, and I'm always in save/invest mode. What should I do?
Oh, yeah. I get this question all the time. I'm going to take this.
Go for it.
And then you guys can chime in from that. But yeah, this is exactly why having a financial plan and having a strategy makes all the difference. Because if you know that you are attending to every single part of your financial plan and doing exactly what you need to be doing in each category, it makes it so much easier to have that disposable income and spend it guilt-free. If you know you have your emergency fund stacked, if you know that you've got the right insurance set up in case anything ever happened, if you know that you have your debts paid off, and you also know that you're maxing out your retirement plans, well, you're doing all of these things, or you know exactly how much you're supposed to be doing towards each. And then anything above that, have some fun. You only live once. But it's not a bad thing to be an oversaver. Obviously, that's how FIRE people retire at 40, 45. But also you want to balance enjoying life as well. And the way to do that guilt-free is by being clear on what your financial plan is, each category of your financial plan, and knowing exactly what you're contributing to satisfy that every single month or year.
Yeah, I guess the way that I would think about it too is like, so you get your paycheck or your monthly income.
Yeah.
Pay yourself first, right? Have your save, your investment capital that goes out, then pay your bills to support your living. And then And then whatever's left over, that can be guilt-free spending, right? You can look at that and say, I either choose to spend this guilt-free, or I really don't have anything that I want to spend money on, so I can just juice that right back into the investment and savings. But maybe keep a list of like, when I do have guilt-free spending available, I'd love to go on a trip, or I'd love to buy a boat or whatever, right? You can do that guilt-free. And
the other thing that helps with this too is a lot of people have no idea what they're saving towards. Like, I call it know your number. Like, what is your retirement number? What amount of money is going to help you sustain the lifestyle that you want to live when you get to retirement age, whatever that age is? And knowing that number, maybe it's $1.5 million, maybe it's more, maybe it's less. That helps you know, okay, I'm on track to get there by putting away X percentage of my income every single month, and the rest is like, I'm good. Like, I'm gonna get to my goal. I'm good. Anything extra, I can either spend it or I can just pile it in and front load my retirement if I want to.
Trev, just buy boats.
In the words of Charlie Munger, I have nothing to add. You guys pretty much nailed it.
Cool. All right. Next question is from Mr. Diggs. What's up, Mr. Diggs?
Diggs.
Hey, Chris, can you give your perspective on Synthetics project? Also, are you still big on Tezos? Yeah, I mean, so disclaimer, I do own Synthetics and Tezos. I've taken a lot of profit out of Tezos, made some damn good money on that, but it hasn't really hit like a full bull cycle. It's been a very, very choppy market over the past couple of years. We'll just take a look at a quick chart here. See if I can find a lot of history. Yeah, I mean, I was buying Tezos down here around, I think my average cost basis was around 70 cents. Took some profit every time it popped, took some around 2. So I've just got a runner. It's a ETH competitor. Synthetics I am bullish on. It's kind of this new wave of DeFi, and I think synthetic assets are very promising, and I think there's going to be a lot of opportunity there. I recently bought SNX down around $6 and took some profit around, was it 13 or 14, and I'm just holding the rest. So yeah, that's really my thoughts on that. Next question is from Bruce. I was ripped off by a so-called Bitcoin trader, cloudinvestment.org, to be exact, for $15,000. My question is, how can I get justice or get even? If you want to know the whole story, listen, okay, so I'm sorry you got scammed. Unfortunately, there are a ton of these scammers and impersonators out there. There's probably 5 or 10 Chris Dunns on the internet having conversations trying to scam people right now. It comes with the territory. A lot of people that come into crypto initially come in by getting scammed. That's a lot of some people's first experiences, unfortunately, either by investing in a scam project or getting scammed by an impersonator. You got to make sure that you control your private keys, or if you are going to trust an exchange to hold your keys, make sure it's reputable and make sure they have good security protocols. But under no conditions ever should you ever give your Bitcoin or crypto to somebody that says they can trade it for you and make money. 1,000% of the time that you do that, you will lose all your money. Guaranteed.
Louder for those in the back.
Yes. Never give your money to somebody that says they can trade it for you unless they are a legit hedge fund with a track record and they manage a lot of money. But if somebody messages you on Facebook Messenger or Telegram and says, hey, my name's such and such, and I'm a successful investor, and if you send me a Bitcoin, I'll double it in a week. That is guaranteed to be a scam. Are you going to be able to get justice? Probably not. A lot of these guys are not in areas where the rule of law is prevalent. So good luck. I would say, you got to wipe your hands. That money's probably gone. And just be more careful in the future. It's an expensive lesson, unfortunately. There are a lot of like cloud mining scams, a lot of I've got a list on my website. If you go to the top nav bar, I think it's impersonation warning. I took, for a couple of years there, I was one of the first guys getting impersonated. So I took all of these pictures, and eventually it just got to be so much. I was like, fuck it, I'm not going to even take pictures anymore. I'm just going to warn people and do the best I can. Any other advice, guys?
No, unfortunately, this is all too common, and it's just only going to get worse probably. So just stay vigilant, be careful, be smart.
Yep. All right. Let's see. Claudio, Chris, I know you're in Bitcoin and ETH. I wonder which altcoins you hold and why. You mentioned DeFi coins, which makes me think, which makes sense. I think last year I thought DeFi was just as hypey as the ICOs were in 2017. Would love to hear your opinion on DeFi itself and some DeFi projects you think will have a bright future. Yeah, so look, I'm going to say this. So every year there's a new flavor of the year in crypto, right? 2017, it was ICOs. 2018, 19, security tokens were starting to become a thing, but that's very slow. This year in 2020, it was DeFi, right? DeFi is really just a marketing term. It actually doesn't mean anything specific. And so just like in 2017, you've got the full range from scams to legit projects and everything in between. But in crypto, anything outside of Bitcoin, you have to understand that over time, well over 95% of these projects are going to zero. Most of them will fail. A, some of them are blatant scams, but B, and probably most importantly, is they'll just fail. It's startup world, right? And so in the DeFi space, I am interested in anything that has to do with creating new markets, new tradable assets. I'm interested in decentralized exchanges, anything peer-to-peer. Insurance gets a little weird and risky, but I would just encourage everybody to do, for every hour that you spend actually like trading or investing, you should spend 100 hours researching. Before you do that hour of investing, do 100 hours of research. I mean that quite literally. Because if you're going to play in the space, you're just like most angel investors lose money. You're probably going to lose money if you do the shotgun approach and invest in a bunch of DeFi projects. But if you are actively trading and know when to get in and when to get out, you can make money and grow your wealth by being more tactical and active with it. But again, a lot of people fail in that arena too. So you've got to decide how much effort you want to put in. And if you're just going to expect to go out there and kind of copy people, you're going to be late to the game and you're not going to manage those investments the right way. So just be careful. I have been opening several new positions over the past month. But again, I approach it with the proper position sizing, meaning I'm not putting a large percentage of my portfolio in these initially. I start with starter positions and I build into them over time. What do you guys think?
No, I mean, well said. It's there's still a lot to learn about DeFi too, right? It's so new that a lot of people
every day.
Yeah. I know there's some smart people out there that are starting to try to put out some more fundamental based research on DeFi projects. So I would seek those out for sure and just try to, like you said, do as much work as possible to try to understand, what are the true fundamentals behind these things rather than just like the hype. What is going to drive them? What are the milestones for the projects?
Yeah.
When do you think it goes mainstream? Like what are they working on that's an actual user application that'll be relevant? Those are the types of things I'd be focused on in kind of the deeper research phase. And really trying to find the smart people that are truly working in the space and not just tweeting about price and that type of stuff.
Yeah. Where are users actually using a project and not just speculating? Uniswap, for example, this is when we got into in the like 4s and 5s. We're up basically a double on that as of today, but people use Uniswap. It's a place, it's a project where users are actually getting value from it. Now, again, the fundamentals are much different in crypto than in stocks. And so you have to understand the key differences there. And a lot of it is driven by speculation. It's almost easier, I think, and you guys correct me if I'm wrong, but it's almost easier to value a stock because it's grounded in cash flow, right?
Yeah.
So,
I would say that's a fair statement.
Yeah.
I would point out too that even with DeFi, I think it'll be an 80-20 principle type of situation where 20% or even less of the projects will actually end up being 80% or more of the total value of all of the DeFi projects. And that because things like that will attract scale and network effects. So I would really focus on trying to figure out what the top 10 or 20% of those projects are going to be and focus really on those.
Yeah. Great advice. Awesome. Well, what are you guys looking forward to over the next week before the next show, either on the earnings side, news side, fundamental, macro? What are you guys looking at?
Obviously, earnings season is upon us, so that's pretty exciting. Trav, what were some big names reporting over the next week? Do you remember?
Yeah, we've got, the banks have been reporting, but they continue to report this week. So you get Bank of America, you get companies like Netflix, you start to get some of the tech names, you get, United Airlines, Fastenal. So starting to get some other industries, Intel, which will be a big one on Thursday that a lot of people will be watching since they're getting a new CEO and probably want to hear more about what the go forward strategy looks like. IBM, it's kind of a boring company these days, but they report this week. Schlumberger, which is, oil and gas services on Friday. So yeah, you've got quite a few this week, but then many more next week, and you start to get a lot of the different industries and different players in reporting season. So yeah, we've got quite a few coming.
Awesome. All right. Well, guys, thanks for watching. Hopefully next week, not hopefully, definitely next week, we're going to be back in the studio and get rid of this Zoom fatigue. And
Yes.
yeah, we'll be live hopefully. So, all right, guys, thanks for joining us. If you know anybody that would get value from this, feel free to share it up, like it, and go to wetalkmoney.com, submit a question for the show, and we'll see you guys next week.
Ciao.
Take care.